What happens when speculation goes wrong? Dr. Copper, often considered one of the biggest, most important metals in the world, just fell off a cliff at one of the fastest rates ever. The US dollar has been rising up like we've thought this week, and Microsoft and Meta earnings absolutely knock it out of the park. Why is all of this so important as positive gamma takes hold on markets once again, even though they're at the resistance levels? Guys, there's a lot going on. Stocks, commodities, and cryptos broken down right now. Don't go anywhere. There's heaps happening. Well, welcome back, everyone, to The Daily Show. My name's Tom, and we have a lot to discuss as always. Big things going on in the markets, particularly when it comes to staving off a recession. Yes, the latest GDP results were in, and although they didn't really move the markets too much, except for the US dollar, which we'll talk about later, we did basically see a positive GDP, which means that we didn't go two bad GDPs on top of each other, leading to what they call a technical recession. But is everything so good underneath the hood? Well, not quite. Imports might have been up, and of course, why is that? Well, a lot of them were going ahead of the tariffs, but we saw investments actually decline 2.1% internally, and we saw exports actually drop 0.19%. So the real story could be about the next GDP result. And do remember, nothing looks as it seems when you're talking about tariffs. It's kind of like this chart here. US import consumer goods rocketing through the roof as we reported on yesterday. But then, of course, dropping straight back down. One of the fastest, or is the fastest rate of change ever when it comes to imported goods. And we will note that this will be the storyline as we start to see a lot of inventories running out. Now, remember, some of these companies are buying 12 months of inventory. So we're not going to see that happen anytime soon. And I know in the news media, everybody's saying, oh, see, it was fake news. There's nothing to do with tariffs. The thing is, they take longer than anybody expects. So usually it'd be like 3 to 6 months. This one could be even 9, 12, or even 18 months before you see the true effects of a long withstanding tariff. And if you're a student of history, you would know that when you have broad-based tariffs, it does eventually start to hit into, of course, demand. Now let's take a look at premium for US copper, because the last 24 hours weren't just big earnings, they were also wild moves. And this reminds me a lot of the Euro Swiss all those years ago, where we had a pegged level at, I think, 1.2, and then all of a sudden the Swiss central bank said, oh no, we're not holding that anymore. And boy, oh boy, was it a liquidation event. This has actually continued after hours as well. And we're seeing well over almost 25% here on copper in terms of it down from the top. So why? Well, Trump's new 50% tariff turns out only hits copper products, not the actual metal. So what have we seen? Well, speculative longs have been taken out. Arbitrage trades, well, they're gone. And futures are, of course, down, because realistically, anyone that was betting on the tariffs, all of a sudden, oh, wait, it's something else. And this is the big problem with when you have this one large government kind of mandate over the top of any investment asset. It's been something that's always remembered to me anyway when it comes to particularly some Japanese trades and particularly that Euro Swiss, because I still remember people getting absolutely wiped by that. That's one of the biggest moves in copper. It'll be interesting to see how this affects everything moving forward. But boy, oh boy, that's going to have ramifications for so many positions today in terms of deleveraging. Be careful out there, guys. Risk management is key in 2025. We've seen it so many times now. Now, speaking of the best stocks, are we seeing a good result? Microsoft, Meta, the two big ones, they were pretty good. Microsoft's one of my favorite stocks, obviously one of the highest moats in the market, but even I thought this might be a buy the rumor, sell the fact. And as I often say, you don't want to predict earnings necessarily, because you're always going to say, okay, it's going to be a beat. We knew that, the last 10, 15 times it's been a beat. But I thought it could be a buy the rumor, sell the fact. Well, not when you get a result like this. 18% year-on-year beat in revenue. We've got EPS 365 beat by 27 cents. You can see very big numbers. And Meta was kind of the same thing. Ad pricing up 9, EPS 7.14, revenue 47.5 up 22% year-on-year, and obviously a whole bunch of CapEx spend. So this is all AI infrastructure spend, build outs, and basically the building out of being able to sack staff as well. The businesses are clearly starting to become more lean machines in terms of being large. And this is going to be a problem for unemployment in the future. So do remember, yes, it all looks good on the surface. and it is good for these businesses, but it could be very, very bad for the overall markets as AI starts to show in even these results. Now, what's going to happen in the future? Well, we'll see. But for now, the after hours were a totally different picture to what happened into the hours. So we actually saw a little bit of dropping going on, a little bit of volatility coming in, and then boom, straight after those earnings and the calls, things did pretty well. So we're going to go into the next 24 hours now, which is probably the more questionable ones, which is the Amazon and Apple, because of course they're going to be more affected by tariffs and the guidance will be interesting there. But I tell you what, the software businesses, they're doing very nicely. Now, will volatility spike? Well, we've seen what we call the VVIX, which is, of course, the volatility of the VIX. That's been spiking up pretty heavily. But will we actually see a massive change in anything else? Well, this is, of course, the question mark. And it looks like August, September, October, we've currently got this huge rally that's been going on that does tend to happen through the last 20 years, but we don't know it's there yet. We do have a couple of dark pools, though. Some big ones that came in right at the highs and some big ones that came in near the lows of the last 24 hours. Now, we're watching this because this UVIX is, of course, a 2 times the long VIX futures. And when we get these big dark pools, they start, simmering and sitting everywhere. It could mean that volatility is just around the corner. And I stress that it could mean that. We still do not have a reason to say that the market is going short. We look for flow, we look for price action, and we still haven't seen a huge amount of sells in some of the biggest stocks in the world, including indices. Another thing we haven't seen is necessarily calls go everywhere. We've got calls in particular stocks, Hood, Coin, PLTR, some of those kind of big names, but we're not seeing that broad-based call frenzy like we did in 2021. Now, does this mean that we should still worry in August? Well, I've been talking to quite a few of the biggest players and out there in terms of, the data and the stats. And obviously we do know that August in second year post-election terms, it does tend to end negatively. Now, we're not in August yet, but we're about to be there. The monthly closes will be interesting. So this is what happens. But you've got to remember again, even if Augusts are bad, they're not necessarily shocking. You're talking about 5-6%, the more garden variety of a pullback. So that is also important to note. And one of the reasons why this occurs is that it's a mixture of policy and also sometimes a mixture of sucking in retail traders. Now, we do know that we are very active this year, more so than we've been since 2021. So basically, 2021, the most active amount of retail traders. Now 2025, the second most active amount of retail traders, making up over 20% of the market. And this will expose us to being kind of rug pulled at some stage, but clearly the street hasn't decided to do that just yet. The move in the dollar, though, is an interesting one, and we'll go into that in a little bit more detail soon. So let's talk about real S&P returns. You can see here that we are pretty much on the standard run since 2022 of how the market should return. This is a cool chart here from Julian Timmer, and basically you can see that it's pretty much riding the garden variety. Now, if that was to happen, it would mean that in general, we would have quite a few more weeks of bull run before getting towards the normal kind of end, which would be like a 1962, 49, 57 kind of run. Somewhere between here, which is about 150 weeks in, and 190 to 200 weeks. So could we have another 40 to 50 weeks of overall bull run before something actually goes bad? That would be what currently the market is kind of suggesting. But that doesn't mean there won't be pullbacks. And the reason why there has to be at some stage a pullback is mostly because the street is super behind. Now, what we've had so far is CTAs, commodity trade advisors. They've been forced to buy. And we reported on this about a week and a half ago. They're actually being forced to buy as the market goes super positive gamma. But as we know, when everyone gets super hyperactive, eventually there will be a rug pull. Morgan Stanley believes, though, that generally the 12-month bull case is 7,200 on the markets. And what is occurring is the euphoria reading is starting to go into those more extreme reads. So effectively, we are now at a point where we are in extreme greed or starting to get into extreme greed. So why should this be paid attention to? Well, while the market rallies, and that means that, of course, you still want to be more on the bull end, at the same time, you have to be looking at the macro and saying eventually this is going to affect the markets. It does eventually take control, but again, timing will be everything. Global liquidity, that's been pretty good in recent times. And obviously, we've been paying a lot of attention to this. But we also see that debt is going up as well, which means that speculation has now becomes fully levered. And the more this goes on without pullbacks, without the garden variety of 5 to 8 or even 10% pullbacks, the thing about it is then you get one of those brutal sells and you get higher vol. One of the key things of any good bull market is if it is going up slowly, and we've got a chart for this for our next video, and it's dull, then it's what you call a low volatility bull market. Now, when that happens, it's actually pretty good. When the volatility starts to spike and you see a big sell day followed by a big rally, that's usually where you get your pits, and which is a pullback in time or an actual pullback itself. So remember, volatility will matter into this bull market itself. Over the next 24 hours, we see the earnings that probably are going to be the ones that aren't so good based on even just the charts: the Apple, the Amazon, and the Coinbase. So those three worth watching. Robinhood's earnings after hours, it was up and then it was down. So yeah, that'll be interesting to see how it actually also trades. And do remember the expected volatility moves. Microsoft was off. It was expected to go 4.5, ended up being like a 10 on the day. So it was pretty wild in terms of the overall moves for that and Meta. But these ones are meant to be still hundreds of billions of dollars shifting hands. Now let's take a look at how the market closed. You can see very different. Actually on the trend line, actually down 63, 62. Then we got the earnings, and at the moment, the time of this recording, we're at 64.26 on the futures, pushing almost here or around new all-time highs and kind of moving towards that positive gamma style flow. So if we take a look at what that could mean, it could mean that 6,500 is possibly going to come sooner than you think. And you can see here, there are so many calls and puts floating around this week. If you go to the 1st of August, we have all these puts sitting around 63.50, and we've got all these calls starting to position at 64.50 and even upwards of 6,500, which now becomes the biggest strike moving into August. 6,500 calls are a big wall. So if we keep moving up here and we get this next, 80 points or whatever it's going to be, then yeah, 65 is going to be the next major wall on the markets. And then after that, you can see here when you go into December, you've got all sorts of big levels starting to show up. Let's now move over to Tesla. So you can see here, Tesla stuck between like a 300 and a 325. So clearly, a lot going on there from Tesla's standpoint. And NVIDIA is in this very neutral. There's calls and there's puts. And NVIDIA continues to push higher. We're now through the 175, moving into potentially even the 200s. So 180 is the next big call wall, which will probably hit over the, literally in the open tomorrow, based on everyone going hyperactive. And a lot of this is just funds being forced to purchase. Those CTAs got triggered after hours, and that's why we're seeing futures driving up higher, because they kind of had to buy. They have no real choice. And it's interesting to see how that dynamic is currently working. So let's have a look at the warning signs. Do we have warning signs right now? We don't in the bonds market, as we've mentioned. If this breaks past 3.01 here as a ratio, hey, we'll be paying attention to it. We don't have defensives moving up. So again, no sign of rotation yet or major rotation. And the RSP SPY combo that we looked at last week, it's been in decline, pushing, of course, the markets higher. So how much higher can the V-shaped rally go? Well, it's dull. It's moving at a nominal pace. That is not usually kind of a sell just yet, but we are looking for it. Another thing is this copper chart. My goodness. Yeah, that's big. That's big. That's big, big, big. If you want to put it in perspective as well, if you jump copper out, you will be hard pressed to see something like this. Now, traditionally, when you see copper dive like this, it's really bad because it often shows weakness in the economy. So I'll be interested to see how this actually ends up because, of course, a lot of this was driven by clearly tariff speculation. And yeah, that's an absolutely wild move with copper. And yeah, if you have a look at the small time frames here, if you go like a 5 minute, you can see how quickly that contract came through. So very wild. In fact, I'll actually dial it into the 1 minute just to show you guys. This is just, it's one of those real liquidity problems. And you can see here the spread switch. So we saw an initial spread widen, then we saw a massive push down, and that's all happening in like seconds. So that the speed at which this is happening is just so extreme that it creates mass illiquidity. And then, of course, we go into stabilization. So this one will be interesting to watch. We will be paying a lot of attention to it, and we'll see how it is now that we've seen the storm. Now, dollar index, in my opinion, one of the better trades of the week. We've been talking about this since really the weekend and the Monday. It looked better on the charts. It's a perfect case of good technical analysis and flows, and also being against the general press. I mean, the press has been dollar's going to explode and blow up and no one likes it, but the actual price action told you something different. So obviously we've got the inverse head and shoulders that's broken out. That possibly drives us to about 101.60. I do think ultimately the dollar is probably going to fall off, but this was helped by the GDP, because basically what we saw was a pretty strong looking GDP, at least on the surface, and that actually pushed yields up and then drove strength into the dollar. So the Fed was unable to cut, and obviously there's a bit of loggerheads there between Jerome and Trump over that stuff. Now, this also, with the strength of the dollar, pushed down metals. They're recovering now a bit, but we don't have a new trade on gold just yet. We do know gold is in a pit, which basically means in a pullback in time. It still is overall bullish on the higher time frames. Obviously, the macro still supports that in many ways. But when we look at silver, it did get hit quite hard, and it went straight through 37.60. So no day trade activation. That's why we had above these highs as a possibility. It's still fine, although we have now seen changes of trend on the daily towards the downside. Nasty weekly candle, which we already talked about. Very interesting to see how this plays out. For my longer term macro approach, the way that we've been discussing it, I think it's okay. And I think that clearly there's still some upside potential here for something like silver and of course gold. So it's not that it's over from a macro side, but certainly the price action right now, the bears are in control of this, and they're pushing down into this very nice demand down here. And that could actually push as low as like a 36.20, 36.50 before we see major support come back in. So very important point for silver. We'll cover it in the next video. Now, oil did spike off all of this, creating kind of a doubling bottom effect. So you can see the resistance breakout, which is kind of cool. So oil certainly seems more bullish than bearish at this stage, and that's a first for it for a while. And Tesla is stuck. It is so neutral. A lot of people are effectively just drawing kind of a series of lower highs and a series of higher lows and saying, is it trapped, Tom? Yeah, pretty much. It's literally trapped. And we don't have a clear positive or negative gamma style situation. Now, Microsoft, it was blowout. It was a pretty good earnings, let's be real. And it absolutely ramped. Now, the trend was up. I thought it could be a buy the rumor, sell the fact. If I had to guess, that's what I thought it would be, as in we'd have a green earnings, but it would be like not enough. But it did it, and it certainly kept driving higher. So congratulations if you have that one. And Meta, of course, also drove a new high. So pretty good result there. Now the market will focus on Apple, which has been very neutral. You can actually see it sold into the close, kind of almost creating a double top. But yeah, this will be an interesting one. This one could be affected more by, of course, the tariffs, and same with Amazon. So very interesting results here over the next 24 hours, and something we'll be paying a lot of attention to as well. When it comes to semiconductors, they did pretty well. It shows that Microsoft, Meta, and everybody else is spending lots of money. So because they're spending money, semiconductors are back in control. And this means that as long as semis are still in the upward trend, we cannot say that the markets have rotated or they're weakening. And for now, it still is there. I would say that I do expect it, but at the same time, I've kind of thought around 6,250, 6,300 on the S&P was a nice level to keep some powder dry. And so far, the market has continued to spike up. So remember, markets will do whatever they can do to make as many people seem as stupid as possible. And they'll also stay, let's say, ridiculous until everyone gets all in. So it certainly is that way in 2025 several times over. So remember, if you're going to be a good trader investor, you've got to stick to your guns and know what's going on. For now, price action is up. Macro looks shaky. Euphoria, probably there in some cases. However, it's being backed up a little bit. So what this means is that we need to see flows and dark pools, and we just don't have enough of them just yet. Now let's move over to Chinese market. Still in a bullish run. Did pull back. So this is now at that level where you've typically seen a little bit of support buying. That's kind of cool. Again, would like to see a bid here. We'll update that over the next 24 hours. And wow, look at NASDAQ. Broke above by the close, above the shooting star. That's going to squeeze a bit of shorts out. So for now, as long as the earnings hold up for the other big tech stocks, maybe the market will try to squeeze a little bit higher. There are no real turns. Remember, you need that lower low. We haven't got it just yet. So positive gamma is in play. In terms of crypto world, it's the same thing. We've got strength here in Ethereum, and we're also seeing some strength in Bitcoin as it kind of goes sideways. Many alt pairs as well have gone through. These are garden variety style pit pullbacks in time. So we have a big move, we sit kind of similar to gold, and then eventually you coil into a breakout. So plenty of opportunities. I think there'll be there's already been opportunities on the dollar. There's probably going to be further opportunities in crypto, and certainly I do think that based on the stats and based on the evidence, especially with the VIX and everything, the volatility will come back into these markets. But it's a question of when. And of course, if you enjoyed today's video, then make sure to sub and we will update you when that could occur. Jobs numbers as well coming out. And remember, with the AI blowout like this, there's no doubt going to be more sackings on the horizon. That's going to affect and need the Fed to probably do some cuts on the future. So the market will be looking for that. If you enjoyed today's video, subscribe, smash the alert button. We'll see you in the next one. Bye for now, guys.